Alright, so good day guys, this is Wisdom right here. Like I promised you guys here on the video about CRT model and how you could actually relate it to SMC. So it's actually DOL here. That's literally drawdown liquidity. So drawdown liquidity is actually a critical concept in trading. It refers to how market targets liquidity push, typically located at highs and lows. So the importance of draw on liquidity is it actually helps traders anticipate market moves by identifying key price levels where liquidity pools such as swing highs and swing low accumulate. This level also often serve as magnet for price. Yeah. So we literally have types of DOL here. We have like the short term draw on liquidity. It actually helps you identify where a retracement profile actually tends to start, and then the long-term drawn liquidity, it's a major mover and expansion. It actually helps you see where price is heading to on the bigger picture. Yeah. So let me quickly explain that on the chart. So let's say the first candle here, we have something such as this. Let's see this guy the red candle. Let's see the blue candle. Let's say we have something like this. So your short-term drawn on liquidity will be the first low or the first highs that price is going to take out. Let's say this guy is literally like the first low. If this guy is your first low, then this guy is literally your short-term DOL. Your short-term DOL. Then we'll literally be expecting our price to actually come below this guy, then reject back into this guy, and then close below this guy. Then we will start anticipating our price to actually go for the next the long-term draw on liquidity. That is where you start expecting expansion from, and that is where you'll be looking for your trade opportunities towards. Yeah. So the concept is literally very simple here. So here will be your secondary your long-term drawn on liquidity here, your long-term DOL. Then we literally expect the next candle here to actually come to literally give us something like this. Let's use this guy as a red candle. So we expect something like this. You could see this week here. You could see this week actually came and took out this low. Then we rejected back immediately into this guy. So if you reject back immediately into this guy, and then price happens to close with this rejection right here, and then price happens to close with that rejection, then we'll start anticipating the next candle to actually go and take out this long-term drawn on liquidity. So this guy actually serves as magnet for price most of the time. It's literally attract price to actually go in that direction, and that's literally where you'll be expecting your trade from. So it actually helps you to see where price it's literally actually heading to here. So your next candle should give you something like this. Let's say price actually open here, and then something like this. Let's use guys literally the blue candle. actually expect price to go take out that long-term drone, that long-term DOL here. So the concept is literally very simple here. So candle range highs and low. The first candle is actually the generation of liquidity here. First candle generates liquidity for us and provides two liquidity areas, your CRT lows and your CRT highs. But in a normal term, we call this one short-term drawn on liquidity. Then this one is the long-term drawn on liquidity, where you are anticipating your next expansion towards. So let's talk about order flow plus key level plus CRT here. So most people often just look for this entry pattern here to actually long or short from, which is not that bad. But any entry model or any model at all which is not in line with the market trend, you are literally on the wrong side of the market, no matter how good the model actually seems to look. So let's actually talk about order flow plus key level here. So most of the time here, to actually trade this guy profitably here, price will have to tap into a key level. And what are key levels? Key levels are a higher time frame zones that price do come to react from before going to its destination here. So let's say we are literally bullish here. Let's say we are bullish. Let's say we are bullish. Okay, let me just use the candle form. Let's say we have a key level at this point. Let's say we have a key level at this point. Then we have this. And then let's say the next candle actually opens. And then we have like little expansion to the upside. So we have this guy. We have this well, so literally this guy would literally be our key level here. So let's say this guy is actually red candle. Let's say this guy literally the red candle. So let's say this is our key level. So key level could actually be in form of like an order block. could be in form of another block, it could be in form of a supply, it could be in form of a supply too, but most times it comes as another block, and you see an imbalance below it. So let's say this guy actually come and tap into this key level. For it to actually have a precise and a very high probability CRT models here, price will literally have to come tap into a higher time frame key level, then let's say the next candle on the higher time frame actually came and give us something like this, So literally here, this guy right here is your short term DOL. This guy right here is your short term DOL. Why this guy literally is now your long term DOL. So this your long term DOL, it's not where like the trend of price, or like the whole concept or your whole trade idea is going to end. It's not. Okay, let's say this is your higher time frame order block, and the price actually came tap into that zone, and then your short term DOL is being taken, and then we start anticipating a new trend to the upside, which is your secondary drawn of liquidity. Alright, we have blue candle. So this guy literally here, will be our next drawn on liquidity, and then we'll anticipate price to actually go to that zone and tap into that zone. So what I actually explain here is how to actually spot a very high probability drawn of liquidity. First of all, price will have to tap into a key level on the higher time frame, then you still the higher time frame, then you map out your key level. Then after a price actually reject inside this guy, nearly price rejecting inside this guy and close, then you start looking for your long position to this guy as your first drawn of liquidity. Then your buy side liquidity is literally at this guy, expect a retracement, and then boom to that side. So this is actually the best approach to CRT or drawn of liquidity. And again, for it to actually get a very precise drawn on liquidity, it should be on the daily and on the weekly highs and weekly lows. There are liquidity levels that can be used as drawn on liquidity. One of the easiest way to determine drawn on liquidity is literally at your daily highs and your weekly highs and lows. It's actually the easiest way to actually spot your drawn on liquidity. So let's go to the chart to see some example for ourselves. Right, I actually spotted a trade on Euro on ETH here. Okay, let's take off everything. Right, on ETH here, starting from the daily time frame. Right, you could see that price actually came and tap into this demand zone. Price can tap into this demand. Sorry guys. I think my network is disturbing. So price literally came, tap into this demand demand. This demand literally broke structure to the upside. Literally broke structure to the upside. Literally broke structure to the upside. And then this is your primary targets for that demand point of interest on Ethereum here. So going to like the 4-hour time frame to actually refine that entry. To refine that entry, look for for you to refine an entry, look for an unmitigated point of interest inside that entry, and that is where price will be interested in to come pick orders from. So going to like your 4-hour time frame, because see price actually came into like this 4-hour time frame key level. Price came to this 4-hour time frame key level, and then if you go back to your daily time frame, you could see that we have the candle range theory that I just said. So this low is your short-term drawn of liquidity, and then immediately price actually closed below this guy. Immediately price closed below this guy. I sent you guys a trade for it to actually look for your long. So this high is been taken out, and after price take out that high, then the next high should be this high. The next high should be probably that high as your liquidity target. So your short-term deal is been taken out, then you start anticipating for a buy. I literally saw a buys though, but I don't really trade ETH. So here is your long-term drawn on liquidity, and I sent you guys that the trade as my directional buyers on this guy. So going back to your 4-hour time frame, price tap into this key level, and then going to your 1-hour time frame to look for a confirmation of that key level. Since price actually closed and rejects inside our zone, sorry for the break, guys. Alright, so going down to your 1-hour time frame, as price rejects that zone, your confirmation is your change of market character, and then entry. We have a change of character of this region, not an internal, sorry. We have a change of character of this region, and then look at this. Then we had this guy right here. We have this very good order block on the 1 hour, which actually led to the change of market character. So this is literally your entry. Your stop is few pips below that guy. Then your primary target should be at this long-term drawn liquidity. So this is like a 5-hour trade, and then your second take profit should be at this buy side liquidity from the daily time frame from your analysis. So this is literally the trade, but I literally expected price to actually come into this guy. I literally expect price to come into this guy for the buys, but price did not. So I sent you guys this trade idea, and then we had this low to be like the structural low for price to come into that point of interest for the buys to actually continue from, but price didn't. Price actually left that zone, and then price literally heading to the daily targets at this region. So if you could actually spot some buys to that highs, you could actually make some money for yourself. So like this is like an explanation And then I think we had the same thing on BTC USD. We have the same thing on BTC USD, but on BTC here, I sent you guys this. They only map out this other block. I only map out this other block, and price did not actually tap into the other block. Price actually came and tap into this imbalance right here. But this, when mapping out your other block, you need to map your other block with your imbalance, because most time price could come for your imbalance and give you a good reaction, and then could actually buy from there. But I was a bit carried away with that other block here. So we had our change of character at this region still. We had our change of character. Immediately price came for that zone. Immediately price came for that zone. We had our change of character, and then we had our confirmation from here. So if you actually long from this guy, alright. So going back to your daily time frame, you could actually spot your CRT from the daily time frame or from 4-hour time frame, but make sure it's actually on the H4 and daily with the weekly time frame. It will give you the very high probability this on playing out. Your short term drawn on liquidity, then your long term drawn on liquidity. Or long term drawn on liquidity. So immediately price actually came, tap into this key level. Immediately price came, tap into this key level, and then reject back inside. Then I literally know that price is going for this long term drawn on liquidity, and then this is like and then this is the next drawn on liquidity, like the next buy side liquidity, considering the fact that price actually came for this daily key level around this guy. So you should be looking for buys till this highs is being taken out. Till this highs is being taken out. So most people that actually were selling, they were on the wrong side of the market, and then they got kicked out. So I was expecting price to come to this guy. I was expecting price to come to this guy. Sorry, I was expecting price to come to this guy, and then this range here as my liquidity for the buys. But it seems price ignores that zone. Price could still come for that zone, because this long-term DOL, after price takes this guy, then price will go for another drawn on another structural liquidity. If you actually know the concept of liquidity very well, you literally know what I'm talking about. Immediately price take a high, price will literally go to take a low. That is how the dynamics of the market works. Price move from liquidity to liquidity, so you need to just know how to position yourself very well. So if I take this long-term DOL, then price could just come for this guy and then bounce from this guy to this guy. But if price actually do something like this, we will be in for a lot of money here. So this is what I have on this guy. So most guy, we are actually selling from this guy, neglecting the fact that we are coming from a key level with a CRT model. It's actually a very strong concept, and I expect price to go take out that high. So you could actually look for your buys to actually join. This is just my own setup. If you actually have your setup, you could actually go for what you actually work with, because the direction is actually the ultimate. Since the direction is known, you could just look for your setup to the targets. So that is it for drawn on liquidity. So most people actually call it CRT low and CRT highs. If price takes some CRT lows, price will start targeting a CRT high, a CRT highs. So it's just different name, but on SMC you call it short-term DOL and long-term DOL. So that is basically it here. And then again, for it to actually have a precise DOL, apart from the fact that price will react from a key level, price could actually react from a range and then give you your DOL, and then you could actually make money from it, in the sense that we all know that price actually moves from highs, lows, highs, lows. So if you are actually bullish and then price came and took these lows, we are not expecting price to come for this highs here, and then if price actually give us a CRT low, then come take out that low, and then we'll start expecting price to go for a CRT high. It will still be a plus for your range, So this concept to actually work for a range. If price takes a low or a high and we don't actually have a very nice key level right there, could actually anticipate the same thing. So let's take a good look at gold, and then I don't want this video to be more than 30 minutes. Then we are done with this. So if you actually have any question, you could actually send it to my DM. Yeah. So on gold, going to like the 4 hours, I'll be using past price action here. Going to like the daily share, going to like the daily time frame. Okay, let's check the weekly time frame. Alright, so on the weekly time frame, we kind of have a CRT model here. This guy, we had price took out this low as the short-term DOL, and then we are now expecting price to go for these highs as the long-term DOL from weekly time frame on gold. I want to use like past price action to actually explain this concept to you guys. Okay, even this guy still we are still coming from a key level. We are still coming from a key level, but this is not like an analysis section here. We are still coming from a key level, and then this, so we could actually get a retracement and then buy to this guy on gold. Buy to this on gold, but that's like I can't like really find this guy right now. Let me check the 4 hours. I can't really like get my head around it. So this is already 30 minutes. This is literally 30 minutes already. So if you actually have any question, you could actually ask your question or send it to my DM. You're welcome, guys. See you guys in the next one.